Hi, my name is George Dagnino. I'm the editor of the Peter Dac Portfolio. This this video is about why everybody's wrong in predicting a recession, predicting Armageddon, predicting the end of the world. Uh, I've been saying this now for a while, but there's a new data that's coming out that seems to prove the point. Yes, manufacturing is weak, but the overall economy is doing well, and the interesting thing is that we'll continue to do well. These two charts may help to prove the point, but they're interesting enough because they're two different sources saying the same thing. This is why I like these charts. The one here on top is the producer price index of corrugated boxes. In other words, if you want to ship anything, you've got to put it into a box, and therefore the prices of boxes increase depending on demand. If the demand increases, the price of producer prices of corrugated boxes increases, and when demand slows down, the price of those boxes slow down. And what you have here, you see, is a wave. Prices high, prices slow down, prices increasing, prices slow down. Now, if you followed my business cycle indicator, those curves that I just showed you correspond exactly to the business cycle indicator I produce in every show, in every of my issues of the Peter Dac portfolio. Now, again, why do we care? We care because during the times when prices increase and the business cycle strengthen, then cyclical sectors are strong. In other words, industrials, financials, commodity sensitive kind of stocks. When instead demand slows down and prices slow down, like here in 2018 and actually in 2022 here, then what happens is the instead defensive sectors are strong: healthcare, staples, utilities. And this is again is the prices went down. This is the recession. This prices went down in 2007, slowed down in 2014, peaked 2018 and 2021, and they showed a slowdown in the economy. Now the price of corrugated prices are accelerating and are showing an economy that has been strengthening. This is what the industrial sector, very specific kind of information, is produced by the BLS. Now let's look at the bottom chart. The bottom chart is produced by an international organization that measures the strength and growth of all the economies in the world. And this is a leading indicator of the U.S. economy. Now the dates are not corresponding because they're two different graphs produced from two different sources. But in 2007 it slowed down, like here the corrugated prices. It peaked in 2014 and slowed down, like corrugated boxes. And then here slowed down again in 2018, like the price of corrugated boxes. And again in 2021, the leading indicator declined as the price of corrugated boxes, pointing to a slower growth in 2021, a slower growth in 2022. Now, why do I show you all this? Because right now, the leading indicators is rising since 2023, and it's confirming that the price of corrugated boxes is also been strengthening. And as you can see, even in the past, the strengthening of the leading indicators was anticipating the strength in prices. The same thing in 2014 in here. So the leading indicators has validity in telling us what the economy is doing, not only the price of corrugated boxes. Right now, the leading indicator is saying the economy will continue to strengthen because, again, it's a leading indicator. Therefore, it's not a coincidence that producer prices, that is, price of commodities strengthen. And of course, inflation is not going to decline as more people expect. In fact, I think it's now rounding up and is going up. So what these two charts are saying is the leading indicator, trend of the leading indicators has been confirmed by the trend of producer prices of corrugated boxes. And what it's saying is the economy is strengthening and will continue to strengthen. So right now, the Atlanta Fed is measuring Q4 growth of 3% plus. So we are going to have a 3% plus. Now, why that is bad news? For whom? For yields. Why? Because bond yields, as I mentioned many times in my videos and in my reports, bond yields are more or less very close to the sum of growth plus inflation. So if you get growth of 3% and inflation of 2.5, 2.7, you have yields that are much higher than what they are now. So the point is not to dramatize, but bond yields are not likely to decline anytime soon. When will they decline? Well, they will decline when the leading indicators start declining and when corrugated boxes, the producer prices of corrugated boxes starts slowing down. Only then will yields peak and declining. Until then, strengthening, rising inflation, and rising interest rates. At Peter Dagg's Business Cycle Academy, we offer 3 membership. Membership number 1, only the videos like this one, every time we publish it. Membership number 2 is videos plus other economic and financial updates. And membership number 3 is the Peter Dagg portfolio, which is 22 pages twice per month, plus videos, plus model portfolios. And we also show our trading strategies, which have been produced great results, by the way, in 2025, if you follow what we have been writing, and then, of course, market updates. Well, thank you very much for following this video. I think what we just showed you has very important implication for the investment strategy. And again, if you want to have more details about what we say, what we write, what we predicted, you can always become a member by going to www.patreon.com/Peter Dagg. Again, thank you very much for following this video, and I hope to see you really, really soon. So long.